Hi everybody. I just wanted to talk in this video about the value of gold, which is not the same as the price of gold. Value is what is worth, and price is what is traded in the market. First of all, just to start with, I wanted to ask a little bit why is the gold valuable? First of all, industrial use, then jewelry. We all love shiny things. And it has been acting as a currency for over thousands of years. And just to compare it to other currencies, we could say to the dollar or the euro, those have been trading as currencies for 100 years, euro even less. And for example, gold you can melt into any unit size without losing value. I don't think you can melt, cut, or divide any dollar and keep the value of this dollar or euro or any other currency. Just to keep in mind and to keep a perspective of why is maybe gold a superior class than other currencies in the currency asset class. But getting back to the question originally asked, what is the intrinsic value of gold? And we could ask ourselves, okay, the gold has been increasing a lot and we are really big fans of gold as a currency, but is it worth the money that we are paying? And one of the metrics would be the cost of production. The all-in sustaining cost in the mining gold industry measures the total expense required to produce an ounce of gold, which, by the way, now is expected to be around 1,500 to 1,800 per ounce. Historically, in the last, I would say, 30, 20 years, since I didn't find information before that, gold price have been fluctuating between 1.2 to 2.5 times the all-sustaining cost. So now we would be like in the higher bracket. And this is like, I would say, is a very good floor base because not a single gold miner will produce gold if he's losing money. So I would say that the all-sustaining cost works as a very good floor value for gold. Then another one that we could use is M2 versus gold. So the money supply in the market versus gold. And for example, taking a base of 1,959, a comparison of increase between M2 versus the increase in gold price, and from 59 to 26, M2 increased 80 times versus gold 117 times, which with this metric we could say, okay, gold is overvalued like at 45%, because if we check the times that gold has been like increasing value versus the increase in monetary supply, there's like a 45% additional. But as well, this is not fully accurate because I took the earliest database that I could find, 59, but if we, we could ask ourselves when, if this is the correct base. I don't know. This is the base that I found, but if we go back in time with like more data, maybe the numbers will be obviously different. So yeah, I just took this base because at the time we still were in the base of like $35 for an ounce of gold. But yeah, I don't know. I would say it's like an interesting metric to keep in mind right now. With this like intrinsic value calculation, we will be overvalued, but 50%, almost 50%. But we also have to take in mind that from January 2020 to 26 July, M2 increased at 49%. So basically, in almost 5 years, M2 increased at 50%. So this 45% overvaluation could be very well covered in 5 years if things continue how they've been so far. So yep, just to keep in mind as well. Then another one would be the real interest rate model, which means that the difference between the real inflation and the interest rates. And this one is quite tricky because even if CPI or like inflations are published by governments, I don't really believe those numbers. I think they are very undervalued. And inflation calculations by the governments have been changing like almost every now and then just to make them more convenient. So I think that these ones were probably the most accurate way to calculate gold, but it's quite tough to say what is the real inflation and then discount the interest rates. And then another one that I don't think is probably the worst metric that I found, but I still think it's interesting to see, is S&P 500 to gold. And we could say that the S&P 500 has a very strong relationship with the money supply. And for example, if we look at the Standard & Poor's and we discount inflation, you will see that the profitability of the S&P is not that amazing as it would be. So yeah, I mean, this is another metric. For example, in the past, historically, prices have been fluctuating between 0.2 ounces of gold per unit of S&P to 5.5. And yeah, I don't know. Right now, I think that we are at 1 point something, almost close to 2. So yeah, I don't know. Just to keep in mind. This was a video just like informational, just for those persons that want to be a little bit more open and have like other thoughts other than just thinking that gold will climb and gold is a strong asset. And even if it's a strong asset versus all the other currencies, we still, I think that we have to be critical and we have to think what is actually the value of gold. And even if it's not fully accurate, keep in mind those things and just to be a little bit better at investing every year. And thank you for listening and see you in future videos.